Hi there, welcome to Kneppy Invest and welcome to June, the first June 2024 ASX rundown video. And overall, pretty good day on the markets, unless maybe you're completely in tech, only up 0.11%, and it has been down during parts of the day. So, the agenda for today's video, and I should get it, is we'll have a look at the ASX today. Before that, maybe go through a few bookmarks. And then after the ASX today, including looking at the best performing and worst performing companies, we'll have a look at the top 5 announcements of the day. And I might mention a few honorable mentions and maybe a few charts as well. I actually did write down 2 companies, including Ramsey Healthcare. Ramsey Healthcare is at a really important support level and almost at long-term lows, not highs, lows. Okay, so let's get stuck into it. And I suppose let's have a look at some tweets. I don't think this video is going to be too long because the top announcements of the day were ordinary. Well, that's probably being a little bit unfair on maybe, well, on at least one company. But anyway, Kobayashi letter says, has stagflation been confirmed? GDP is falling, yet inflation seems a little bit more sticky. So that's not what we want to see. We don't want to see growth in economies be relatively flat while inflation remains relatively high. That will be the worst case scenario. What is the definition of stagflation, by the way? Something like that. I don't know the true definition, but it's low growth but high inflation, something like that. Economy characterized by high inflation, low economic growth, and high unemployment. It's probably the only thing we don't have is the high unemployment. And maybe that will be the saving grace. So that's the definition of stagflation via Empower. Well, there's a question here. Is Australia heading for stagflation? Someone says anticipates potential stagflation. And Wikipedia says, let's have a look what Wikipedia says. Stagflation in situation in which the inflation rate is high or increasing, the economic growth slows down or rate slows and unemployment remains steadily high. So again, I just think it's the unemployment. I'm not sure whether we will see unemployment rising because so many people are retiring or at the retirement age and we don't have as many people entering the workforce. So that could be our saving grace. Could be. I don't know. But stagflation is the one thing the central banks around the world don't want us, even the governments around the world don't want us to move into. It's an awful scenario. Another little bit of a dig at Cathie Wood's from Bar Chart. Great chart to sum up Cathie Wood's ARK Invest over the last 2 years as she and her ARK Invest fund have been selling out of Nvidia and Nvidia share price keeps on decreasing. The exact opposite what you want them to be doing. And I don't know if you've ever seen this chart. I've seen this chart all the time. Bar Chart has published this one again, a sort of a psychology of the market cycle. And it's always interesting to see where people think we are at right now. I have no idea. Yeah, maybe complacency. Who knows? I have no idea. We're definitely not depression, disbelief, anger, capitulation, panic, denial, anxiety. Maybe it's on the left-hand side. Maybe, I don't know. It's definitely not, yeah, I don't know. Let's see what the people think. Let's see what the people think. Let's see what the people think. New Zealand, complacency. Okay. Yeah, that's what I thought initially. I don't know. The public buys the most at the top and the least at the bottom. I agree with that. In between anger and depression, belief, capitulation. So everyone is completely different when it comes to this particular chart. And that means probably we just don't know, we're probably nowhere on this at this point in time because it's not obvious. I think it's going to be fairly obvious if we are at a particular point like capitulation. That'll be fairly obvious. Anger would be obvious. Hope or optimism would be obvious, but elsewhere, not completely sure. This one from Beth Kindig, first time I've ever looked at a tweet from her, and it's a very relevant tweet, very important tweet. AI is projected to send electricity demand soaring. Wells Fargo estimates AI power demand could rise from 8 terawatts per hour in 2024 to 652 terawatts per hour. I'm pretty sure T is terawatts, or TW is terawatts, by 2030. So it's a significant increase in power demand. And then she asked, what are your favorite AI power consumption plays? That's mostly to do with the American market and the American plays. So this is one of the reasons why I am investing in data center companies and companies that are servicing data centers, that sort of thing. Because I do think it's going to be a significant growth area because of AI. And I do believe AI will completely change the way we live within the next 20 years. I do think it's the next revolution. Okay, that's all in regards to tweets. Let's have a look at the ASX today, including the best performing and worst performing companies. And this is something I haven't had a look at, so this will be all new to me. But first, let's have a look at the best performing sectors and indices. Only one sector is down, that's IT. A little bit surprising there, although if you look at the American markets on Friday, the Nasdaq was the only one down, while the Dow Jones was up 1.5%. Utilities, financials, real estate, energy, all up by over 1%, while discretionary, telecommunications, healthcare, still struggling healthcare, and IT all up or down by less than 0.5%. Banks having a good day, up 1.4%. Gold down 1%, even though materials is up. So it looks like gold is a little bit weak today. And if I go through the rest of the indices, let's just see if any other ones are down. Yeah, gold, emerging companies, and IT are all down. Now let's have a look at the ASX 20. ASX 20, just to see which companies have done well, which big companies have done well. ASX 20 is up 0.8. So I'm assuming right now, I'd say 16 are up, 4 down. 16 up, 4 down. Wow, that's just a guess. Don't read anything into that. It's just a guess. Which 4 companies are down? REA Group, WiseTech, Rio Tinto, Fortescue. So 2 tech companies and 2 iron ore companies. So obviously iron ore is a little bit down as well. BHP, however, is up 0.84%. And the best performing companies, QBE, Westpac, Goodman Group, ANZ, National Australia Bank. So 3 banks within the 5 best performing companies, and just behind them, Woodside and Santos. So obviously energy is going well today. Okay, on to the best performing companies. So I'm hoping one company in my top 5 announcements of the day is in this list, one, and I'm thinking maybe 2 or 3 of these companies might be in the worst performing companies. So let's have a look at the top gainers. Company called Inoviq, IIQ. That ticker code is a little bit memorable because it's IIQ, and I've never had a look at this company before, but I do know that ticker code. Up 39.79% on pretty good turnover. So this is a potential announcement that I have missed. So let's have a look to see if they have released something today. More than likely they have. And let's have a look-see. Breakthrough exosome therapy. So IIQ. Let's have a look at the market cap of this company. So obviously they do some sort of, they're biopharmaceutical company based off ovarian cancer test validation. So let's have a look at the market cap. 59.81 million, even with the share price up 40%. And I'm just going to click on this announcement very quickly. It's not the sort of announcement I'm going to be rushing to buy some shares in. Breakthrough exotherm therapy to target and kill breast cancer. It sounds absolutely brilliant if it proves that it's useful. It still has to prove it's useful. Now, this is a step in the right direction, and we all hope that what they're doing here will be beneficial for humanity in the long run. But this is not an announcement that I would absolutely excited about, because it's only a first step in a long road, in my opinion, for this company. So I don't know what the next step is, but yeah, at least they're on the right path. I don't know. Let's have a look at the chart. So the main reason I go through this process is I just want to see if a company is breaking out, if the market is paying more attention to a company. So maybe this is a breakout for Inoviq. This is the weekly chart. So let's go to the daily chart, because the weekly chart looks terrible. And the daily chart, no. It's really good volume, but you can see a lot of volatility in the share price of this company. So there have been periods of time in the past year, where the market has been really excited. In fact, June last year, share price went from about 50 cents all the way up to 98 cents, almost doubled in a fairly short period of time, in about 5 trading days, and share price pulled all the way back to 50 cents only recently. In fact, the day before this announcement, the share price was at its 1-year low. And a lot of resistance moving forward for this company because a lot of shareholders have bought into higher prices. And we have seen a little bit of selling, but there's been enough demand for shares that we haven't seen the share price absolutely dive today. Share price has been as high as 80 and currently is at 67. What was it? 67, 65 and a half. So that's Inoviq, company I don't know anything about, but we all hope the company succeeds in what they're doing. Everybody hates lithium. Is that a sign? Not everybody hates. That's a ridiculous comment. Not everybody hates lithium. Eeh. Okay, what else is here? Okay, so most of the trading here is on low volume. I can see one of the companies. In fact, the company that comes in at number 1 on my top 5 announcements is on this list. So let's have a look at the companies by market cap. APM Human Services, that is not on my list, but they did release an announcement in regards to a takeover bid and a trading update. Takeover bid was, what was it, $1.39 or something like that? Up 10.4%. And coming in at number 2, we have Navigator Global Investments. This is the company that has coming in number 1. They have released an upgrade, so we'll talk about that company in a moment. And this, again, just proves that if you buy a company whose share price is an uptrend, you tend to get lucky more often than not, because this company had come onto my radar quite a few months ago because the share price had moved into an uptrend. The share price continued in the uptrend, and now they've released a profit upgrade. Droneshield, another good day for that company, up 9.8%. Another brilliant chart. So I'm going to have a look at Droneshield chart because that's a brilliant looking chart. Vulcan Energy, interesting. They did a couple raise. Well, it's not really a couple raising. They did a placement. At about $4, and for some reason the market's liked it. I'm going to stay away from Vulcan because share price is way too volatile, and I'm trying to now stay away from these volatile mining companies. There's just a little bit too much froth in a lithium company. Everybody hates lithium except for Vulcan Energy, apparently. Strike Energy, BrainChip Nano. So yeah, BrainChip and Weebit Nano. Share price has been hammered, but a little bit of recovery today. 29 metals. I'm happy it's on that list because I am trading that now, and Novonix is there as well. And Findy, up 10.9%. And that's it. I only really expected Navigator Global Investments and some of the other companies on this list, so I'm a little bit surprised about, particularly Vulcan. I actually expected Vulcan to be down today. Anyway, so let's have a look at the top losers. Sorry, companies who have share price has dropped. You're a loser. And this is by percentage change. And again, I'm looking for volume. And WA1 Resources, this is an interesting one. Share price down 14%. I will look at the chart for this company in the chart section of this video. And I'm wondering, did this company release an announcement today? Let's have a look. I did not see one. They did. Yeah, they did. 8:30. I completely missed this one. West Toronto project, Looney assay results. I'm not going to open it up because more than likely the information in this particular announcement will go over my head. For some reason, ComSec opened it really quickly. So yeah, it's just looking at 100-meter spaced drill holes. And when I looked at, is this niobium? No, niobium? Yeah, it's niobium. I don't know how to pronounce that. Niobium. NB205. Yeah, it's funny. I can actually know that's niobium just by looking at the thingy. What do you call that? The H2O. What's that called? Molecular makeup. Anyway, so seems like the market didn't like this, and I wouldn't be able to understand why just by looking at these numbers. And we'll have a look at the chart for WA1 Resources, but the market has not liked that company. Share price, I'm pretty sure that's the company whose share price is in a beautiful uptrend, has been in a beautiful uptrend. So we'll have a look at that later. And other than that, have a look at Atlas Pearls too. I've done a video, I haven't recorded yet, on grading my trades, and Atlas Pearl is the focus of one of those, the only one I've got to record. And I'm just happy the share price is down because I did sell out of that company completely at about 22 cents. Now it's down to 10 cents. And Booktopia, there's Booktopia. So one of the companies on my top 5 announcements of the day, in fact, number 2 is Booktopia, and I'll discuss why later in the video. So let's have a look by market cap. Lovisa, did Lovisa make it? Yes, Lovisa made it into number 4. I'm not completely surprised by that. It's not the sort of announcement I will sell out of, but I do understand why people are selling out of Lovisa because people don't like risk. And what they did release today is, or does increase their risk by the smallest amount. And I just think it's a significant overreaction from the market. You understand why. Catapult, not surprised there. 2 really good days in a row after the release of their results, down 7.4%. And I think this is a buying opportunity, sort of a buy the situation with Catapult. Sheffield Resources, another really bad down day for that company. So I might have a look at the chart for them. And otherwise, Camplify, wouldn't be interested in that company. A lot of tourism companies are suffering right now. Camplify, Tourism Holdings, even corporate travel management, Flight Centre, Hello World, all their charts look absolutely horrendous. All right, so a few companies that didn't make it into my list are in the top 5, except for the last 2. No, number 3 and number 5 did not make it into my list, or did not make it onto these top and worst performing companies. Number 3 and number 5. Okay, so let's get into the announcements of the day. So a couple of companies could have made it into my honorable mentions. Vulcan Energy was one of them, and Betmakers was another one. Betmakers, last time I looked, was down. And we'll have a look at the chart for Betmakers as well, because this company had been put onto my watch list because the chart looked like it wanted to turn around, but I think now that potential is starting to go away. Bet365 to launch fixed odds in NJ, which is New Jersey and Colorado, with Betmakers. So it seems it was a positive announcement, but the market says no. Okay, so let's start with announcement number 5, and that company is Nuix. So he's up 1.61% today. They released the earnings update on the 20th of May, and they've released another further earnings update today. Now, initially I saw this and went, oh, this is really interesting because they've upgraded earnings from 47 to 52 up to 55 to 60. But then I read it and I went, oh, okay, it's not that significant. It's based on the receipt of funds relating to insurance claim made for non-operational legal costs associated with litigation. That's why they've increased EBITDA. If you take that away, EBITDA or expected EBITDA is unchanged, or underlying EBITDA is unchanged in the range between 63 and 68. So initially I thought, oh, this is a really interesting announcement that they've increased earnings again, only a week or so after the previous upgrade, but not quite so. Now, in saying all that, the chart for Nuix is absolutely brilliant. So that's probably one of the reasons it came in at number 5, is just the chart looks absolutely stunning. And I really started getting interested in Nuix back in July last year, so less than 1 year ago when the share price was about $1. Now it's $3.18. I could argue the valuation of this company is getting a little bit stretched, but who knows how long the market remains irrational and the share price could even double from here. It could go up, quadruple from here. Who knows, particularly if they continue releasing profit upgrades. So Nuix, coming in number 5, the announcement initially looked really good, but it's really just a chart, a brilliant looking chart. And I am trading Nuix again, by the way. Okay. Coming in number 4, we do have Lovisa. All right, so Lovisa's share price is down. And by the way, I am a long-term holder for Lovisa, and I have no fear. And this announcement today does not fill me with any concern, but it is or could be a concern to some shareholders because many shareholders don't like risk. And when they see an announcement saying CEO succession update, they get nervous and they go, I've got to sell my shares in this company. I don't know who the CEO is going to be in a year's time. Well, actually, that's wrong because they've announced who the CEO is going to be. But the thinking is, well, the new CEO might not be as good as the previous CEO. We've got to sell our shares. I just like this announcement because it's a succession update. They know who their CEO is going to be in a year's time. And this is the sort of forward planning I love to see any company do or any organization do. It's not a reason to go and sell your shares in the company. In fact, the new CEO, who is, what's his name, John Cheston, could be even better than the current CEO, who is Victor Herrero. Victor Herrero has done a great job, but there's no reason to panic and sell or hit the sell button when it comes to Lovisa. And I'm still not surprised that the market has panicked, because I see this a lot. The market panics a little bit too much, and that does lead to buying opportunities. Is this a buying opportunity for Lovisa? I don't know. Now, the share price hasn't really pulled back, unlike other retail companies. And the reason behind that is their rollout plan, the global rollout plan for this company. And it is one of the best retail companies on the ASX. I could see the argument it's probably the best retail company on the ASX just because of their growth plans. Now, this line here, maybe I should do it differently. I have a feeling this is the long-term line, and we'll color it something else. We'll do it like this color there. I have a feeling that might be the long-term uptrend for Lovisa. Yeah, well, yeah, it's uptrend since the bottom of the COVID-19 financial panic. Almost. Also, it's almost a perfect uptrend. So share price is well off that uptrend line, and that's the time to think about buying Lovisa shares, is when you see the share price get towards that. So right now, their uptrend line is around about $20. So Lovisa share price is about 50% higher than that. 50% higher? Yeah, 50% higher from $20. So no reason to get too concerned about this. Even though share price has dropped 10% in a day, it's not the end of the uptrend, and the company is not going to cease existing from 1 year's time because of a change in the CEO. And this also tells me the board of this company is always forward-looking. They're forward-looking by quite a bit, and that's understandable because Brett Blundy is the chairman. Anyway, so that's Lovisa coming in number 4. Not necessarily an announcement I would be concerned about as a shareholder, but the market is weird sometimes. Now, I did 2 tweets this morning. One was on this company. Oh, the share price is not down as much. Share price opened down about 10% and has recovered. I don't know why, because the company released a market update, deleveraging plan, bank covenants, and guidance. So they have announced they are breaking covenants, banking covenants, and even the guidance was not that positive. This was a negative update from the company. I'm not going to go through the whole thing. A deleveraging plan. So have a look at that. Banking covenants. Synlait is now forecasting it is unlikely to meet 3 of its current banking covenants as at 31st of July 2024. The interest coverage ratio, leverage ratio, and senior leverage ratio. This reflects the timing of Synlait's deleveraging and further weakening in its financial performance. It's that last bit. Further weakening in its financial performance. The banking syndicate is currently reviewing a package of proposed waivers put forward by the company. So things are not moving in the right direction for Synlait. They also released a guidance update, expecting EBITDA to be. They still expect EBITDA to be between 45 and 60 million, excluding a non-cash adjustment for the product costing method change of approximately 17 million. But Synlait is now expecting the EBITDA result to be the lower end of this range, which means we're one step to this company releasing a profit downgrade. The expected result has been further impacted by softening of ingredients margins due to foreign exchange rates and pricing, revised inventory provisioning and forecasted write-downs in the second half, increased financing costs due to extended timeframes to deleverage the business and operational costs, and then go into pharma suppliers. Won't go into that at all. All right, so in my opinion, this was a negative announcement. I don't want to ever read that a company is breaking or unlikely to meet 3 of its current banking covenants. The question is, should anyone be invested in this company? And probably the answer to that is no. I don't think this company would be called a high-quality company, not the sort of company you want to own for the long term. Synlait Milk. It's been around for a while, listed maybe 2017. In fact, let's have a look at the weekly chart. 2016, listed back in November 2016, so a little bit off. And this company was a bit of a market darling just after it listed. Between 2016 and towards the end of 2018, the share price rallied from $3 to a high of $12, so a four-bagger for those who held on. And I actually was a shareholder of this company for a short period during that uptrend. But I knew this company was not high quality, and as soon as I saw the trend end, I decided to sell. And this is why, because when things go wrong for a company, it can go horribly wrong. and the share price of this company has dropped from $12, over $12, all the way down to 42 cents. So that's a decrease of, what's that decrease? 90, we'll say it's 96%. Let's have a look. We'll say 1180 divided by 1220, 96.7%. So let's just say 97% drop in share price over the past 6 years. And the share price has been in a well-defined downtrend. In fact, if you look at the daily chart, if you just focus on the daily chart, there's been no reason to be a shareholder in this company. There was one little period here back in December 2022 that looked like maybe things were turning positive for this company, but that little positiveness died away fairly quickly. But other than that, share price has been a long-term downtrend, and this just reinforces the idea that looking at charts will be very beneficial for many investors out there, particularly those who maintain a holding in a company when the share price is in a well-defined downtrend. And I have been that sort of investor in the past. When I've held a company whose share price has been in a well-defined downtrend, I'm even holding a few companies now whose share price is in a well-defined downtrend, only 2 at the moment, and both of those are story stocks, and I just don't want to sell them for some reason. It's not that I've fallen in love with the companies, I just think there is potential for both companies, and they look pretty cheap, and I decided just to hold 2 story stocks, and that's it. Anyway, so Synlait Milk, coming in number 3, a fairly negative announcement in my opinion, but the share price hasn't dropped all that much. I thought it might have been a worse day for the company, but I'm not sure why anyone is buying shares in this company right now. Almost $30,000 worth of shares traded today. Why are you buying shares in Synlait Milk? Now, there could be an argument to which company is the worst. The company coming in number 3, Synlait Milk, or the company coming in at number 2, Booktopia. Down 12.3%, not surprised. Okay, let's have a look at their announcement. And this is the all-time low for the share price. All-time low share price for Booktopia. They released an announcement, organizational changes. I just don't know about the business model for this. Books, selling books. When was the last time I went to a bookstore? If I'm at work and I'm bored, I might go into a bookstore and then go out without buying anything, just to see if I can buy something via Amazon or something like that. Anyway, they've announced organizational changes. The CEO has resigned, company restructure, and additional funding. I'm pretty sure they also, so the CEO, he tendered his resignation. Why would you want to be CEO of this type of company? Anyway, that's just me. Let's have a look. And something here. To assist the company with its cash flows and to indicate their support for the company's restructure, each of the directors have agreed to have their fees paid to them by that company issuing nil price options under the plan exercisable interest shares in the company. I haven't gone through the restructure all that much. The organisation is proposed to substantially restructure with at least 50 roles considered for redundancy, so they're getting rid of some staff. $6.1 million in analyzed cost savings, and they've secured $1 million in funding to assist in the payment of redundancies. There you go. So that's the restructure, just getting rid of staff. Maybe it's what they need to do, but the question is, how do they grow? Do they mention anything about that? Okay, number of key strategic focuses have been implemented to improve conversion rates to support increased revenue. This includes focusing on core elements of the website experience, which will make it easier for customers to make purchases, with emphasis on development of a guest checkout feature, as well as further optimizations to improve website speed on mobile and desktop. So why hasn't these been implemented in the past? I don't know. With this decline in revenue, if the organizational restructure about to be implemented, the company is no longer in a position to provide guidance and withdraws the guidance provided to the market in its announcement made on 9th of February 2024. So this is another example of why would you be buying shares in this company right now? It could fall a lot further from here. However, in saying all that, where am I? The market cap of this company might be really low, like $10 million. Is it $10 million? $11.4 million. Jeez, you could buy this company for $11.4 million. A few years ago, I'm pretty sure this company had a market cap of about $300 million. maybe even more than that. In fact, let's have a look via FinChat. What's the ticker code? BKJ. BKG. And where is it? There it is. I like FinChat because they've got a little function here. They've got a chart here, but it's a price, drawdown, percentage change, total return, and market cap. So the market cap of this company, look at the last, when did it list? It listed in late 2020. So the market cap of this company at its peak was $410 million. Now it's $11 million. This is the definition of a capital killer. Total change, 97%. CAGR, in terms of market cap, minus 61.8%. In fact, if you have a look at the share price, I'm pretty sure they've done a capital raising. So change in share price, 98%. CAGR, share price decline, 68% per year. If you bought shares in this company 3.5 years ago at the share price peak, that's since they listed. So 3.5 years since they listed, share price has dropped 98%. And if you bought into the IPO and did not sell, have not sold your shares, you have lost 68% the value of your holdings has dropped 68% per year over the last 3.5 years. This is the definition of a capital killer. Capital killer. So let's have a look at the chart. And this is a sort of chart where you might have to look at the logarithmic chart because you can't see. Yeah. So there's a share price getting as high as $3 just after it listed, didn't it? Just after. Share price high was a few days after it listed. And then share price, you just can't even see the chart now because share price has dropped so low. So you do have a look at the log chart and you can just see share price just keeps on going down. Has there been a time where I've been interested in buying shares in this company? Not really. So let's go back to the regular chart. There was this little period here. This little period here back in January last year where I did see share price rally and I thought, oh, this could get interesting. Share price rallied a lot, but then fell back fairly quickly. I can't remember. I might have traded this company for a very short period during that period. So because there was a little bit of an interest, but it was just a lack of volume, I think. But yeah, that was the only time I've even thought about buying shares in this company. And even then, it was only for a very short-term trade because otherwise, look at the share price declining. Okay, so two disastrous investment stories on the ASX, Synlait Milk and Booktopia. Now, the company coming in number one, I know nothing about. A company called Navigator Global Investments. I don't know anything about this company. Up 13% on an upgraded earnings outlook. My favorite type of announcement, and I love how they titled it because it says upgrade in there. They could have just said financial year 24 earnings outlook and given their shareholders a bit of a fit because it could be a downgrade or an upgrade. But if you include the upgrade, you completely eliminate all those shareholder fits, heart attacks they might have. Now, I have mentioned this in the past, that by using technical analysis and looking at charts, you can increase your luck by holding companies that release positive announcements and decrease the amount of companies you own who issue negative announcements, because usually those companies issuing negative announcements are already in down trends. I want some research done on this. Maybe I could do it. So one of the reasons, and the only reason I know anything about this company, is because of their chart. So let's have a look at the chart before we have a look at this company's announcement. So NGI came onto my radar quite a few months ago because of this chart. Look at it. So yeah, almost probably start of this calendar year, the company came onto my radar because it started to move into an uptrend. Share price then was about $1.25, and it just kept going up. So the market saw something in this company it liked. And some people will say the market is almost never wrong. It can be wrong. And this is an instance when the market saw something about this fund manager. I do know that one thing about this company. They're a fund manager. And the other thing to notice is the volume, which probably is an indication there's maybe some other fund managers buying shares in this fund manager because of the increase in interest or volume, which tells us there's an increase in interest. And then the company released an earnings upgrade, and this just vindicates the market opinion about this company. Now, if you have a look at the weekly chart, Yeah, this company's share price back in 2018 was significantly higher than it is now, almost triple. So this could be the start of a massive uptrend in Navigator Global Investments share price. And again, have a look at the volume. Have a look at the weekly chart. You can see a really good increase in volume as the share price has moved into the uptrend. I would like to see that volume increasing even further as the share price goes up. So this is definitely a potential trade. Uh, Now onto what this company did. They're a fund manager. That's the only thing I know. So strong profit distributions from NGI's partner firms drive significant second half earnings uplift. Their company expects adjusted EBITDA of 85 to 89 million US dollars, an increase of between 76 and 84% on financial year 23 adjusted EBITDA, which was 48.9 million. So nice increase from last year. So things are moving in the right direction from this company. I did have a look at the half year results. And one of the things I wanted to find out was what sort of funds do, what sort of, is it? I just didn't know much about this company. So about us. So diversified alternative asset management company dedicated to partnering with leading management teams who operate institutional quality businesses globally. Okay. The company is comprised of partnerships with well-established scaled alternative asset managers who operate businesses which are diversified in cross investment style. So it seems like they do have quite a few partner firms or partners. I did see this. There was a lot of partner firms like Lighthouse, Marble Capital, Longreach Alternatives, Pinnacle Asset Management, Waterfall. Okay, so I don't really know much about this company. NGI is more diversified than ever before now with the scale and partners to drive strong long-term growth. No idea about this company. Even their financial results in February, I had a look at it and went, still don't know much about what this company does. They did release an assets under management update in April. So what's the value of their assets? 29. So let's have a look. They've just got numbers here, not per share. So here's some of they're talking about Lighthouse, investment performance. It's a big meh for me. Anyway, nothing much in that I can see, because usually you see firm level asset under management. It's got here 75 billion US dollars, and the markup cap of this company is 904 million. Oh yes, still don't understand this company at all. Summary in ComSec is a listed Australian holding company for US-based Lighthouse Investment Partners. There you go. There you go. And investment in a portfolio of minority interests in 6 alternative asset management companies. I was trying to find a list of companies they invest in, them funds invest in. So possibly they invest in many listed companies. Maybe, I don't know. It says the PE ratio is only 11. Oh yeah. So that's company coming in at number 1. And the main reason it's coming number 1, they released a profit upgrade, and the chart looks absolutely brilliant as well. Chart looks absolutely great. No problems with the chart at all. Okay, so let's have a look at, I've written down 7 companies that I want to have a look at the chart. And the first one is Ramsey Health. And this is the weekly chart. Share price of Ramsey is right on the COVID-19 lows, and the lows we saw back in August of last year. And the share price of Ramsey Healthcare is under pressure. It is staying just above the support level. That's maybe a good sign. This is the daily chart, by the way. It did look like the share price was trying to break out after they released their results in February. I did take a trading position in this company, but that failed, obviously, by the chart. So that's a positive announcement. Didn't take long before sentiment in this company shifted back to negative. Maybe the other thing to notice here, we have seen some increase in volume the last 4 trading days as the share price has moved towards this support level. So around about $47 could be maybe a potential bounce play with Ramsey Healthcare, and maybe even, I was thinking maybe 10%. It could be even a 20% bounce play for Ramsey Healthcare because it is at support level. So sort of a low risk trade. You could buy about $47 and the share price keeps falling, instant sell. But then you might get the bounce. I have done that sort of trade in the past quite successfully. It's probably more than got probably about an 80 to 90% success rate with that sort of trade, buying on the bounce, expected bounce off the support level. And one of the things I do look for is increased volume. You need that volume to get the share price to bounce. Oh, it's also included this company, and I wanted to have a look at the weekly chart. So this is another story of don't buy the story. I said that wrong. This is another case of don't buy the story. I discovered this company called Anteotech, ticker code ADO, back in 2012, 2013. Share price went through a nice little hype phase back in 2014. Share price rose from about 4 cents to a high of 26 cents. I still remember that. And I was a shareholder during a short period of time there. And I do remember the market was ridiculously high for a company that had nothing. Had a story, but that's it. Then the story petered out. Share price fell all the way back down to maybe a few cents back in 2017, 18, 19, 20. And then the story started again back in 2020. And I had a look at this company back in 2021, 2022, and the story hadn't changed all that much. It was the same story from 2014, but it just been refurbished. Maybe that's a nice way to put it. And the share price went to a high of 50 cents, so double what it was back in 2014. And the market for this company at one stage was 700 million. I think that's right. $700 million for a company with just a story. Maybe $1 million in revenue, maybe $2 million in revenue. Maybe I'm being a little bit harsh. How much revenue do they have at the maximum? $2.5 million in 2017. And since then, 1.3 in 2020. And the markup of this company got to a high of 750 million, almost 800 million in 2021. Markup of this company now is about $50 million because the share price has absolutely collapsed back down to 2.3 cents. The lows we saw between the two hype periods and before I discovered this company. So, so this is sort of a beware of the story stocks. This is what can happen. Because to really successful manage a story stock company, stock and company is sort of the same word. To really successfully manage a story company, you need to be a really good marketer, and they do target retail investors to sell their story. So just be aware of story stocks. This should be a good example. However, saying that, you can trade these. You can trade these when you see that hype building up, that story building. Next one I did write down was Droneshield. So this was a potential story stock who are now realizing their potential, and that's the main thing. This is a potential story stock. This was a story stock a while ago, but they're realizing their potential. And this is what happens when a company realizes their potential. The share price absolutely takes off. And the share price is in a beautiful uptrend. Look at it. There's been periods of time when the management sold out of shares. Remember that in February, parts of the market panicked. Share price fell all the way down to 60 cents. Now the share price has doubled since then. So just because management might sell some shares in the company doesn't necessarily mean something bad is happening with the company. And this is proof. I wouldn't say they're kicking themselves because they would have made a lot of money, but they didn't really have to sell. They might have needed money. And the other thing to really notice, and I've mentioned volume. So share price action on itself is not enough. You want to see volume. So you can see volume increasing. So there was a little hype moment in this company back in January 2023. You can see a little bit of a peak in volume, but then volume dropped away. So the market became less interested in company. Volume peaked up again, but then the volume died. Now look at this uptrend. Look at how the volume is being maintained. So really good volume coming in. And this is fund managers. To get that sort of volume, you need fund managers. So don't dismiss fund managers. And this company now has a markup almost 800 million. And the share price is at an all-time high. I'm assuming it's an all-time high. Let's have a look at the weekly chart. Oh, I see, it's easily all-time high. It's been listed since 2016. There you go. It's taken a while for this story to play out, and now it's not a story stock. Droneshield, WA1. So I'm pretty sure this company was in a beautiful uptrend as well. It's still an uptrend. So even though the share price is down 15% according to TradingView, it's not necessarily the end of the uptrend. A beautiful uptrend for WA1 Resources. Is WA mean West Australia? Maybe. WA1 Resources. I'm going to see if that's... Is WA mean... Well, they are in WA. Where do you get your name from? Is it WA Resources? WA1? So are they saying, or maybe it's West Arunta? Looks like one of their projects is West Arunta. If you know why this company is named WA1, is it West Australia or is it West Arunta? Yeah, anyway. I probably could go, how long has this company been listed? If you go to the prospectus, there might be a reason why this company is named WA. Anyway, I'm getting off a topic with WA, but this chart still looks pretty good for this company. It's not a sort of the uptrend destroying day for WA1 Resources, but I would become a little bit more wary about this company. But this could be the end of the uptrend. We need confirmation. And I have seen some uptrending ending. How would I define it? Uptrend ending days before with one-day candlesticks like this. Perfect example of that would be, is it Novonix? One of these companies. Yep, is it Novonix? Yep, Novonix. Here it is. Beautiful uptrend. And in one day, Novonix share price dropped 32%. And that was the end of the uptrend. We needed a little bit more confirmation because the share price started to go up after that. But then I think we got the confirmation maybe just over a month later when the share price fell below the low. That was a confirmation that the uptrend had come to an end for Novonix. So this is not necessarily the end of the uptrend for WA1 Resources, but I would become a little bit more wary because it's a pretty bearish one-day candlestick for the company. Pretty bearish one-day candlestick. And Atlas Pearls. I should do that video on Atlas Pearls. This is me buying at 5.7 cents, selling at 20.5 cents. I did have a sell point. My sell point was when they released their results in February, on 1st of March. So I probably sold, they released their results probably on 29th of February after trading had finished, I'm thinking right now, or they released it in the morning of April or March the 1st. Let's have a look at when they did release their results. Yeah, they released their results at 7 p.m. on the 29th of February, and then I sold immediately on open the next day. Results were really good, but it's all about Atlas, or no, it's all about pearls and the pearl market. It's really hard to get information on the pearl market, but one thing I did know, or do know, what pearls were, or the pearl prices were off the charts high in 2023, and I just thought, whenever pearl prices are really high or anything gets really high, eventually the prices will pull back, and they've pulled back. And I think they've already confirmed they've pulled back, and the chart now has moved into a downtrend. So this was a really good trade. The reason I want to do a video on this one because my very first grade my trade was a negative one, and I want to do a positive one. So that's pearls. I have no thoughts of getting back in. Sheffield. I noticed Sheffield share price was down 8% today, and that was after 3 big down days in a row. Really big volume coming in. This company released some sort of did release an announcement. What was it? Production ramp up at Thunderbird. Doesn't sound bad, does it? They're ramping up production. Obviously, the market didn't like something about that, and 4 down days in a row, and it's just accelerated. Now this looks like oversold. So I wouldn't be surprised to see a bit of a bounce. And is the share price at any support level? You could say maybe there's a support level sort of in this zone. I'm going to put a triangle. I reckon there's a bit of support zone in right there. Although that's a few years ago. And the share price has bounced off that zone. Yeah. All right, so that's Sheffield Resources. Let's have a look at another company. The last one, Betmakers. I thought Betmakers share price might have gone up today. and that's the weekly chart, because it did look like I was starting to like this chart, starting to like it. Look, we had these two little peaks, and the second peak was higher than the first peak. And I was thinking, oh, this could be the start of an uptrend, bit of a shift in sentiment for this company. But just the share price action the last like week or 2 weeks has made me reassess my thoughts on this company and the potential shift in sentiment. And I just think now the share price is going to oscillate higher and lower, and in a consolidation phase. So I think the share price of this company now is moving into a consolidation phase, and the bottom probably has been reached, and the bottom is around 8 cents. Company did release an operating cash flow and free cash flow positive March quarter. If they release another operating cash flow and free cash flow quarter right now, the June quarter, 1 month to go, possibly that could be the financial signal for a turnaround in this company's share price and a shift in sentiment. And that's all I've got for today's video. If you have any thoughts, any questions, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.